Welcome back, everybody, to another episode of Beyond the Box. My name is Mike McAra, your host, and today I am joined with an absolute superstar in the prop tech space, Alex Leduc, CEO and founder of Perch. Welcome to the show, Alex.
Well, thank you, Mike. Pleasure to be on here.
Awesome. So let's dive in. For those people that do not know what Perch is or have never heard of it, what do you guys do?
So Perch is a digital real estate ecosystem. We help solve two problems really at our core. The first is tackling housing affordability to help people be able to get into their first home faster and to extend what they can qualify for using our network of lenders. The second is helping people build wealth through real estate after they become homeowners. So everything is really a good mixture of the human element of our in-house advisors, our network of professionals, and our analytics, which are robust and proprietary to really help you make better decisions.
So that's a big problem. You turn on the news.
Two big problems.
Right. So you turn on the news and without question, the housing crisis is always going to be top of mind or part of the conversation. How does one set out to want to solve that problem? Like, how did you find yourself where you are today?
Yeah, so it's my background really actually started more on the financial institution side. So what I found fascinating was, and this is maybe let's call it, back then it wasn't as big of a housing problem as it is today. It's only kind of accelerated since then, but it was really just kind of seeing the giant disconnect in regards to how everybody kind of operates in a silo. So the realtor, the lender, the broker, the client, everybody's kind of operating in their own little environment, but everyone's not really interconnected, which eventually, like ultimately it's the client who ends up actually paying the price because they're not able to put together the right plan. They don't understand how financing ties into it. They can't find the right realtor to help them find the right property. Like all of those things have to line up for someone to get into the housing market. So when we look at how little information somebody can go into one of the biggest decisions they make, and then just the general uncertainty around it, we kind of just figured, you know what, there's got to be a better solution to this. And since there wasn't, we set out to build it ourselves.
So let's talk about that, because I don't think there was a we at the time, right? It was probably just you. Am I correct in saying? Okay.
It was me and one guy overseas. So essentially, just me and my den, and then one guy overseas contracting on the front end development side.
So let's back up though. So you're sitting there at your job, which was you were in finance, or you're on the lending side, or what were you doing?
Yeah, so I was one of the lenders in Canada. So I was a senior manager of corporate strategy and analytics.
Okay, so you're sitting there, and then talk me through this. How do you go from that to like, I've got this idea, I'm going to go change the world?
It was just kind of like the writing was on the wall, and then the industry just wasn't kind of moving in that direction. So I was convinced that real estate was going to go more and more digital, especially mortgages, just because they're becoming so commoditized at this point. I mean, they've always been to a certain degree quite commoditized, but now it's like Canadians are kind of catching up to the rest of the world and shopping everything online. So I saw that it's going in that industry because all the lenders I've worked with have been heavily reliant on the broker market. So I could just see how much the broker market really matters, but it's so fragmented, and I didn't see any like dominant players in the broker space that eventually I'm like, all right, well, it's not going to be the lending side. I think it's going to be the broker model that succeeds. So I was like, let's double down on the broker model and kind of get it going.
but to make that leap, like what gave you the confidence, or why did you? Because a lot of people see certain things and they see a lot of opportunity, but a lot of people don't take the action. Like, what was it that drove you from saying, I see this and I feel like I could change it, to, you know what, this is something that I'm passionate about and I'm going to dive in on?
It honestly took a couple, like for a couple of years, I'd always like play around with the idea of, oh, you know what, I could just go start this myself. But I think the big thing for me is I didn't have a co-founder. There's a lot of limiting factors where I'm like, don't have a giant trust fund or something to back me. Like there's just not the right thing. So I actually ended up picking up a lot of skill sets. So I taught myself how to code, a lot of other things where like, if I start, I have to essentially be able to do two people's jobs. That was really kind of the first thing that I wanted to get under my belt. And then once I had that, it was really the leap of faith came when you get to a bit more of that point where you're just so much more sure about it. So I did that by actually, like, I put in my own capital, built an MVP, and then I'd literally go through food courts, just waiting for people kind of eating alone to go, hey, do you have 10 minutes? And then just walk them through a concept, a very minimalistic product. And then once enough people kind of went, oh yeah, I would use this. And then it just kind of gave you that reinsurance, because it's not like my mom told me my product was cool. It was like strangers that I've never met who had a 10-minute discussion that went, yeah, I think you're onto something. So then I applied for Mars in their incubator program. And then once I got in, that was kind of the first step I needed to then quit my job and go in full time. Because I think it's that part where you kind of start getting into the idea of wanting to start something, but you keep your job because you don't want to give up the financial stability all in one go. It's really that part where you need a lot of confidence if you're ready to go in full time, because you then go from making a comfortable salary with all of the perks, the benefits and stuff like that to zero for like over a year and a half or 2 years. So it is a huge transition. So you have to, you have to be ready for it. So I was lucky. I had no mortgage. I had a very low rent. I was in a condo downtown Toronto. I had a wife, or at the time, a girlfriend. So essentially, like, together it was fine to like cover rent, and then I just had my den, and that's all I needed. It was a very low cost model.
So there's a lot there. So talk me through this. You teach yourself to code, you get an MVP, and you're like, I'm going to go down to the food court at, I don't know, somewhere in the core in Toronto and just go talk to people like that legitimately. So just talk me through real quick. Like, what was the opening line? Would you like, hey,
I had my iPad. I just walked around and I was like, hey, do you have 10 minutes? Like, can I show you a product I'm thinking of? And honestly, a lot of people would be pretty receptive to it. I would have people be like, no, I'm not really interested. I'm just having my lunch. I'm like, okay, cool. Bye. But then the next person would be like, oh yeah, sure. And then you just get into, and then some people would share so much. It'd be hilarious. Of like, oh, let me tell you about my mortgage experience. And then they go on, like, it's a hate it or love it kind of situation. Like if someone's had a bad mortgage experience, they'll tell you about it. But it was honestly just really interesting to listen to these people of like, what were the core problems they had? And then kind of to learn from it was it was, and it is really reassuring, because I think the biggest unknown when people want to get into starting a business is they're like, is this just me that thinks this is a cool idea, or like, is there an actual market for it? I think that's the biggest, and the reason you feel that way is because you haven't talked to enough people. So when you get it from strangers, it's that's really the last piece of validation you need.
Well, and I love it, because that's exactly what, best practice would always tell you when you're starting a company is go out and call, right? Typically call your potential customers and get their feedback. You took it a step further. You went out and met them in real life, and presented it. So that's awesome. And I think that speaks probably to where your values are, and being, consumer led on a lot of the development paths and the roadmap. So with that, so let's fast forward to today now. So I love sort of where it came from. Today, you've got this platform. So talk me through, from a consumer's perspective, how I interact and how I use Perch. Like, how does it help me, gain affordability, access to homes, and how does it help me build wealth?
Yeah. So I think one of the key differentiators of like where our product actually really like shines relative to any of our competitors or going to the bank or anything like that is we've essentially like aggregated knowledge of like what a really strong mortgage broker would typically go to. So what enables you to do as a user is a lot of the things that people face are recurring, right? Like, how much would this cost me? What am I qualified for? A lot of like, it's not like everybody has a unique set of questions. Everybody goes through the same typical path, which is you want to buy, you just don't know how to get there. So you need a plan. Then you need a pre-approval. Then you need a connection to potentially a realtor to help you go find your property. Then you need a mortgage app. So if you take an expected path, we're able to reinforce that with analytics. And where people really appreciate our platform is because we're very transparent in how we do it. It's not like you're on the phone and you're really getting like a rate kind of haggled to you. It's a system just giving you an output. So you as a user come into Perch for two reasons. You either want to build wealth through homeownership, or you want to buy your first home. So let's go full life cycle here and start with the person who doesn't own a home yet. So you sign up and you create what's called a home buying plan through our system. So our home buying plan will actually basically tell you, you qualify for, let's say you have a young couple, they want to buy, I don't know, let's say $800,000 property. They have this much income. This is their current job situation, their asset situation. And our algorithm will go, you qualify for 620 today. You will qualify for the $800,000 property you want in 1.5 years. So we'll give you an exact month actually that you'll qualify for. And it's based on income appreciation, savings accumulation, actually, and even the property itself. Like, it's 800 today, it's not going to be 800 in a year and a half. So we actually factor in all those things. So what we help you do, the first thing is just identify like how far away from your goal are you? And then we have an optimization model, which then says, if you did X, Y, Z, you can cut that 18-month horizon down by 3 months, by 2 months, by 1 month, by 4 months. So that's the first part. So it's like, okay, well, here's your situation and here's how we can shorten it if you do X, Y, Z. And then once you're comfortable with that plan, So we've actually had situations too where it's even like it might be like some things are binary. So for example, you either have a high enough credit score or you don't. So it's not like, oh, I'm just a bit short on income, so I get something. It's like, no, if you don't have this minimum credit score, you actually get like 0 with less than 20% down. So we had a client who actually was at 580 and we were able to bump her up just by looking at her credit score and going, oh, this is an easy fix. So a month later, she went from being like, we almost doubled her qualifying power just by taking a look at it. So if you go into the traditional model, I guess what I'd say is the first part with like setting that plan is where we're really optimizing it for you versus just going in and being like, oh, here's what you have today. And it's kind of like, oh, come back to me when you're ready versus here's how I can get you there. Is really the part that most people are missing. And then since we have access to over 25 lenders, there is an element to it where we're able to access so many different products and opportunities versus if you go into, let's say, one bank, you really just get whatever their product is and their policies are. So which might not be the best fit, right? So it's really, really important to kind of get diverse options. And then since we have all of those, we're able to put together a really good plan for someone. And then once they actually can meet it within 6 months, they get the pre-approval through our system. We connect them with a realtor or they can bring their own if they don't have one. And then they go out and house hunt. And then naturally what then happens from there is people will start looking at properties. We give them a lot of insights like, what's your budgetary implications on this property? What's the minimum down payment? What's your closing costs? And then most importantly, what are you pre-approved for on the property? Because I think one of the biggest misconceptions out there is that pre-approvals are, this golden stamp product that's it's actually non-binding. It's not even, there is no commitment when you get a pre-approval. Like you essentially have nothing. A lot of lenders actually don't even look at your documents when you get a pre-approval. So when we do ours, we actually do a full document review, and then we give you a pre-approval specific to the property. Because when you get pre-approved, the lender has no idea which property you're going to end up getting. So if you were pre-approved for like 600,000, it might be 540 if you have a condo with really high maintenance fees. It might be 620 if you've got a detached home with no like low property tax rates. It can vary pretty wildly. So we actually give you a pre-approval price specific to every single home you're looking at. So you can actually know like to the dollar, basically, how much can you qualify for? And then once you're done, your application's online. We help compare every mortgage option, not just 5-year fix versus 5-year fix. We compare everything. So should you go variable? Should you go fixed? What about shorter terms, longer terms, the terms underlying it? What are penalties supposed to look like down the line? Everything. And then when you're done, you become a homeowner. So the first step we help you accomplish, like 1, you save a lot of money. 2, you save a lot of time. 3, you can even get there a lot faster than you would anywhere else. But as a homeowner, the biggest thing is that this is where most people stop and they go, okay, I got the house, my job's done. But it actually really doesn't stop there because that house is going to be one of the largest assets you own, but it's also going to be working really hard. So especially if you've owned a home, like let's say in the last couple of years, property price appreciation has been pretty crazy. So we're actually able to tell you how much that house is appreciated through monthly updates. We have annual check-ins with your realtor, so they can actually even give you their opinion on the housing market outlook. We give you an opinion on interest rate outlook. But the most important thing is we then also tell you, should you switch your mortgage or not when rates have changed and there's an opportunity for you to make even more money. But what that essentially does is it gets the user really focused on how they can put their home equity to work. So by leveraging your home to minimize your financing costs, but then also putting your equity to reinvest it, we're helping Canadians diversify outside of real estate as well, to go into retirement more comfortably. So you have people that'll get their mortgage and their life's goals to pay it down to 0 as fast as humanly possible. Then they get into retirement, and your home doesn't pay for groceries, doesn't pay for property taxes. So you need to get equity back out, but you're no longer working, so you don't qualify for anything. So what do? Well, you get a reverse mortgage, a private mortgage, all these other expensive forms of financing that burn through all the equity you worked really hard to build. So it's better if you can actually plan ahead, because then when you get into retirement, you still have your home, but you've leveraged it and you have other assets you can leverage in your retirement to then put forward. So at a high level, we're helping someone compound wealth, diversify their asset base, and get into that asset earlier to ultimately increase wealth on all fronts.
So how much was that the lunchtime pitch with the iPad?
So in its initial form, like we were actually just like a small part of that problem. When we started our product 3.5 years ago, it was really just like that mortgage comparison tool. Like that was pretty much it. Where it's like you run it, it tells you what mortgage you should get, and then you submit your applications online. So we've expanded since then, because what we found is no one's really sitting there going, man, I wish I had a better mortgage. Like people hate mortgages. It's like the least sexy part of home ownership. Home ownership is what drives people. So we've shaped our product to drive towards that goal and then the mortgage is just part of that.
I love it. So there's a ton there, and I want to unpack a little bit, but the first thing I want to touch on is the connectivity of the real estate ecosystem, because I think that's one of the big things that I love to look at as it pertains to the financing of real estate, because obviously there's such a direct tie with the realtors themselves and their clients and the interaction. Because to your point, this is, for most, the largest financial asset that they're going to be interacting with. And the face of that, time and time again, is the real estate agent when it comes to sourcing that home. Now, the challenge is understanding, what is that best fit from a financial perspective, which I think is where you guys dovetail so beautifully on it. So and I think I know the answer, but tell me how you're working with the real estate community on this, because I think there's that massive overlap that sort of plays together.
Yeah, so that really, really good question, and something that we're 100% really focused on is because we found that you can give people plans, but inherently, like, it honestly is only good as the person that's going to help you execute it. So I can tell somebody they have 500,000 in equity in their home, but if they don't have a good wealth advisor, they're never going to invest it. I can tell somebody that they qualify for this much, but if they're not working with the right realtor, they won't find a property that they feel comfortable enough putting an offer on. So how we really work with the realtor is it's a reciprocal relationship. So on one hand, a realtor needs a good mortgage person, because ultimately it doesn't, I mean, unless they've got all cash buyers and that's their only market, then sure, you don't really need me. I mean, I'd argue you still could need me, but it's another discussion for another time. So ultimately, if you have like a good mortgage person, they can help give your clients the comfort they need to help them do their job. Because the worst thing for realtors is if you have somebody who doesn't know how it's going to go, or like they don't really feel comfortable, they're really reluctant to go in on properties, especially in markets like Toronto and Vancouver, where you have houses going off in like 2-3 days. So a lot of the times you have to go in firm, you have to move quickly, you have to do these things. So if your lender takes 5 days to pre-approve your client and your house is on the market for 3 days, like naturally there's a bit of a disconnect there, right? So where realtors kind of choose to work with us is like, one is speed. We can do pre-approvals in 20 minutes or under an hour. So that's the big thing for them. It helps them move quickly, but then our tools help get that client ready, but we ultimately are helping qualify their leads. So if you have 100 leads, I can help them be able to get pre-approved and move forward. But it's also, I think the other thing is realtors recognize the value of accretive pre-approval value. So what I mean by that is you could go to one lender and they say your client is pre-approved for 400, and you kind of take it at face value. But everybody knows that there are different products and things out there. So that 400 could actually be 600. You just haven't found the right product for that client yet. So if you can be that realtor that takes their client from being able to just buy the house they qualify for, which is 400, versus the one they want, which is 600, let's say, you're going to be someone that helps them get their dream home, and they're likelier to remember that. So it really does kind of enable the realtor to do their job if they have a good financing partner, and vice versa. We actually have a good amount of our clients that come into Perch and they want to buy a house, but then they're like, oh, I don't have a realtor. Is there someone you'd recommend? So this is where we kind of come into the market and kind of go, okay, well, who's the realtors we're working with? So the ones that understand that client really well and are as consumer facing as us, but mainly it'll be a lot of the tech forward ones that also really are just on top of the new technologies and efficiency, because the market is really becoming hyper efficient. To compete, you really need to be. So yeah, so it's really kind of that element of we're enabling them, they're helping enable us, and then together we just both grow our businesses.
Well, and that's on, the new buy side. I actually see this as being a great tool that you could utilize from like a client retention perspective. So let's say I've put somebody in a home, 3 years ago, they're in my CRM or my spreadsheet, and I want to touch base and deliver value, right? Because you've got that build wealth side. Is that something you're seeing as well, or could that be something that could be explored as well?
Oh, absolutely. So I'm glad you mentioned that, because yeah, I was just focusing on the purchase kind of component to it. So I'll give you examples actually of how we've already kind of operationalized this. So like I touched on, we have an annual check-in where the realtor is, because what we found is a big thing is everyone's really focused on the next lead that's coming through the door, but a lot of people really miss the value of their existing network that they have under their belt that they can really kind of get a lot out of if they nurture it. So we're able to help them check in every year. We've kind of laid everything out where we make it easy for them to give their housing market outlook. They stay top of mind. They put in their valuation. They stay in touch with the client. So they're staying engaged. But then on top of that, we're helping them kind of find those opportunities. So I actually had a client where it was a realtor's client, and a year after they had built a lot of equity in their house, and then when I had pre-approved them before. And then it was a year later kind of going, hey, did you know you've got a ton of surplus qualifying power and a lot of this home equity? Have you ever thought about rental properties? Like, is that something that was on your goals? And he's like, you know what? Actually, I've always wanted to like have a rental. So we refinanced him. He had the 100K he was able to take out to go buy a 500K rental condo. And then his realtor was laughing. He's like, all right, well, you turned one deal into two. But there is a huge element to that, because most of the time the realtor would love to sell their client as many properties as they can, but sometimes it happens over time. It's not like people buy 5 condos in 1 month or 1 year. So by being able to nurture it and then building wealth faster enables that client to be a move-up buyer quicker. So if they're able to build wealth, they maybe buy that next home in 5 years instead of 7 years because they were able to get there.
Well, and all the top coaches will talk about how are you nurturing your sphere of influence. And the challenge has always been that the average time between purchases is somewhere between 7 and 10 years. Now, for most, what NAR stats will tell you is that about 90% of people want to work with their realtor as soon as the deal closes for the next one. But the challenge is, and the data shows, that only about 10% actually use that same practitioner 10 years later or 7 years later. What I love about this is that you're coming in and helping the practitioner maintain that relationship through value. And then to your example, doing something that we used to call manufactured deals, where you're presenting information that otherwise would have never turned into a transaction because that person wasn't on the portals looking at buying. That person didn't think that they had the capital. It was always part of their hopes and dreams, but you've now manufactured that opportunity by deriving value. Like, is that kind of how you're seeing it?
Absolutely. Because the thing is a lot of the times it can be interpreted as, oh, you're just pushing product because, like, if you can get mortgages out the door, it's good for you. But a lot of the times it's actually, we're aligned, because it's good for me to have that client transact, because obviously, more mortgages is good for our business. But at the same time, like, that client, that was even a year ago. So today, like, there's no way you'd call that guy and you go, yeah, that was a bad investment decision. He's already made a tremendous amount of money, but it's also part of his long-term plan. Like,
Right.
that was something he wanted to do that we're enabling him to do earlier. So as much as I guess it is manufactured, but I think it's more of it's just happened to be like they didn't even realize it was an opportunity that was there for them. So it's like they had the intent, they just didn't think they had the means. But if we can show them the means, then they want to do it. So I think there is that element where we're helping make that deal happen that otherwise would have taken. It's not like it would have never happened, but it might have just never happened that fast if they didn't kind of know that they could.
Well, and like, let me just flip it. It was never going to be a lead, right? It
Yeah.
was never going to be an online lead that could be acquired. And so, I think as things are ebbing and there's that pendulum between, focusing on transactions, focusing on relationships, especially from the coaching perspective, I just see this really lining up with that nurturing of your sphere of influence, right? From that really, how can I help my clients from the realtor perspective really empower themselves into affording the home that they want and building that wealth, which is super, super cool. So I love it. I think that's awesome. So then to take a step back, you're here now. It was a journey to get here. Let's talk a little bit about that journey and maybe what were those, I don't know, what were some of those things that surprised you along the way? Because obviously you started with tools. Now you're at this, I'm going to argue a home ecosystem approach to wealth around real estate. Talk me through that learning path to get here and what that looked like.
Oh yeah, it's just hilarious because sometimes I go back and read like my business plan, my strat plan, like all the things of like, here's what our product's going to look like in the next year. Since the beginning, and I'm just like, you naive fool. But because it's just changed so much since what I originally thought it was going to look like. So I think like the key thing is that we just really, really spent a lot of time with our users. I mean, we still do. It's fundamental to everything we do. So a lot of the times you kind of just hear like, you hear the insight, but it doesn't line up with what you're building to solve the problem. So sometimes you have to adapt where it's like, okay, like let's modify our strategy. And then a lot of the times it also had to do with, we found that in tackling the mortgage first, I mean, our vision was always to grow into an ecosystem. We just knew we couldn't do it to begin with. Like it's almost impossible to just do that much as like your first product. So we knew we would get there. We just felt like mortgages was a good place to start. So now we've really been in a position where we're offering enough value on the mortgage side where realtors or wealth advisors actually have, let's say, a reason to work with us. Because I think at first when you start out, you have no platform. You're just essentially like a standard mortgage partner. Like there's really no differentiator other than service. So it's tough to really compete on that at scale. So yeah, it's just been like a slow, methodical grind to kind of connect the pieces as you go. And then once you hit critical mass in certain areas, then everything else, it's like almost like opportunities present themselves to connect into what you are building. It's just you have to get to the right level before you can kind of open the door kind of thing.
Love it. So on that, you're active in several markets. Talk me through the expansion from proof of concept in one market to like, okay, maybe we got something here, and now we need to go expand beyond this. What did that look like for you guys?
Yeah. So at the beginning, it was just the mortgage comparison. So getting your clients, getting people on the mortgage app, doing all that stuff. But then it became talking to clients, going, okay, like, have you like why did you come to me now? Just seeing a huge gap. So then we expanded it into home buying plans. Then we looked into, okay, well, people actually are struggling to find like a trusted professional. So then it's okay, let's get a list of realtors we can manually refer. And then let's get lawyers we can manually refer. So all these things, as you kind of start doing it, you go, okay, there's got to be a systematic way to do it. So I think you almost become obsessed at some point where everything can be automated. You just have to pick like where's the right balance of human versus like, machine. So it's just this constant evolution of making things happen. But I think another big change was just when I started, it was me and, like I mentioned, one part-time contractor overseas. So the biggest thing now is we're 16 people at our company, and that's enabled us to pursue so many things and get people in the right seats to like actually do this in the right way. So getting all those resources on board and like really pushing after a strategy that we think is really solid is something that you didn't kind of have the luxury of doing when you started, where it's like, it's not so much of like it actually literally becomes not what should you do, it's like what can I do.
Which brings up a great point. So like on that, what can I do? I imagine you started with a local market that you were servicing, right? Where you're like, I'm going to focus here. And
Yeah.
then you're looking at your opportunities. Talk me through the thought around, okay, now we're ready to expand and we have the right tools, we have the right things. Like, talk me through when you're like, okay, now is the time for us to use this, because I believe that there is, or I know that same problem exists in not just Toronto, but also in Vancouver or somewhere else.
So we're licensed in multiple provinces and we have access across Canada. We definitely didn't start that way, but it became a bit interesting because all parts of the business, it has to do with, it's almost like a scalability, and then there's the economics to it. So if you're doing multiple products, each province just offers more opportunity, because I'm no longer going to, let's say, British Columbia just because I can do mortgages there. I'm going into British Columbia because I can do mortgages, build realtor partnerships, build lawyer partnerships, and do a wealth advisor partner. So it's like that entire, like, essentially, if you're able to increase the services you offer, you increase the value of each customer to your business, and then the economics justifies expansion, because then each user becomes much more valuable to you as you scale. So then every market then becomes a massive opportunity in itself, because all those users are now worth, 2, 3, 4 times as much as they were before. But you wouldn't have had that when you started, because your acquisition cost is so high that it's just not justifiable to kind of go that far out to be acquiring users.
Which is interesting because, people always talk about unit economics, and early on, that's not necessarily the key indicator that you should be looking at. There's so many other things, right? Because you're still trying to figure out what that scalable set of solutions are. So on that, recently in the news, you've got the announcement that you've closed your $1 million round. So congratulations on that. So now you've got this capital to go put to work. So what does the roadmap look like for you guys? Like, what does the next year look like for Perch?
Yeah, so as we got busy as soon as the capital was getting raised.
Got to spend it.
We've hired 7 people in the last 4 months. So we've
Wow.
got pretty much the entire roster of people we had worked on to get to be ready for 2022. We're launching our new realtor portal in Q1 of 2022, which we'll be really excited to share a lot more about. So we've really built a unique experience that integrates the realtor into into the client-facing side of things, and then creates a platform for them to build their business along with us. So our core goal for 2022 is to expand our offering, improve our product significantly, and then also expanding into the realtor channel and really building out partnerships on the realtor side. So that's probably, like, I'd say that in a nutshell, those are our core three things for 2022. I mean, I have some surprises that I'll let the suspense build, and if it comes out, there's a couple other things for 2022 that I think will be really awesome. All are complementary to essentially our existing core product, but would just further strengthen the value that we can actually offer to clients.
So I love it, and I love keeping a little bit of suspense. Maybe I'll pull 1 or 2 out, but we'll see. So on the realtor portal, that sounds super exciting. So if there's people listening right now, like, how do they get involved in and be a part of that portal announcement, or be informed of what's going on? Like, what's the best way for those partners that are contemplating working with you guys?
Yeah, so on our website, so myperch.io, we actually even have a link in the bottom right, which is like Perch for realtors.
Mm,
And then there's even a direct URL. You can just go realtor.myperch.io. So that actually explains a little bit about what our platform does. The product itself, we're actually going to be releasing. I mean, we have an existing site, but it's very much more of like a monitoring platform. It's not really like a realtor product, I'd say. So the realtor product, we've actually already started gathering user feedback, and like we have working prototypes of it. So really, if as a realtor you're interested, we're always looking for realtors that are really keen to kind of be early adopters and work with us towards finding those insights and seeing what kind of works with their agents. Because we're always looking for people to partner with. So ultimately, if you want to reach out, absolutely. If you want to wait till everybody else has had a kick at the can and then you'll consider it, not a problem. We can do that too. But we'll be at the BAMP conference in January. We're going to be at the Buzz conference in January. We're going to be at Realtor Quest. So you can definitely come find us, learn more about us. Reach out. We're happy to jump on a call and kind of walk you through our platform, and you can meet some of our awesome people.
love it, love it. So, as we sort of bring this thing to an end here, I got a couple. I don't know if they're quick questions, but they're more kind of the fun ones. So when you look back on the journey, and you think about everything that it's taken to get to this point, what has been maybe one or two things that stand out in the journey where you're like, wow, that was something that either I wasn't expecting, or that was like a key moment, like the TSN turning point, something that you just reflect on that journey, and maybe if there's a little bit of a story that comes with it would be awesome, because there's always those key inflection points, right?
Yeah, no, absolutely. Let me give me a second on that one.
Okay.
Key turning points. 'Cause, yeah, there's a couple of good ones. I'm trying to think of which one I want to
Okay. Well,
touch on here.
while you're thinking about that, the other thing that I just wanted to ask and throw out there is to as a consumer, as a homeowner, to get exposure to Perch, do I have to go into the portal? Do I have to be like a sign up user? Or are there other things that I can sort of engage with just to sort of like test the waters a little bit up front? Because anything to do with like finance is always a little bit, I can be a little bit reluctant to dive right in up front. So I'm kind of
Yeah,
curious, like, is there sort of like try before I buy kind of thing, not that you buy, but something that you guys also have on there from a consumer perspective.
yeah, absolutely. So I guess what I'd say is all the insights like are actually like outside of the dashboard. So any of our
Hmm.
tools and things like that you can just use for fun. There are certain things that you have to create a profile for where it takes not even a
Sure.
minute or two. But then honestly, at the end of the day, like you can just put in an address. Like you don't even have to put in like your real personal information. You might just be curious, oh, should I switch my mortgage or not? So
Right.
sometimes we'll have people create a profile of, test user John Doe.
Oh, we saw those
And
all
then
the time in
later
my
it
old,
becomes like their
yeah.
their real name, right?
Yeah.
So that's fine. Like there's really no need, because I think the cool thing is we empower users to get a lot of the insights without having to actually talk to anybody. So you can do a lot of fishing around before you really have to commit. There's no documents you have to upload. There's nobody, you don't have to put in real information. So you can get a fair bit of it done. It's really then when you want to like actually action on it, where you want us to give you a pre-approval letter, for example, then we have to do our due diligence, not
Right.
because we're, nosy and
Just
care.
part
Like
of the job, I think.
we just,
Yeah.
we have to, because we're putting our name behind it. So I don't
Yeah.
want to I don't ever want to tell somebody, hey, you qualify for this, and then it not come through.
Right.
I've never had a deal not come through, and then I don't intend for us to start anytime soon. Um,
Love it.
yeah,
Okay.
but back to your turning point question. I think
Yeah.
one of the key ones for us was actually uh, joining like the Reach Accelerator. And and, I don't, and this is like an actual like honest here. So I think it was really it really started making us think bigger about like all the things that we could actually accomplish. So I think one of the big things is when you become so in your, not in your bubble, but when you become so focused and you're in the weeds of like your product, you kind of miss a lot of the bigger picture outlook of like there's actually so much more we could be doing. And then when you meet a bunch of founders, I think the big thing, or the takeaway I have, and maybe as a lesson for a lot of other, is like if you're a founder and you're building a business, is like always just be talking to founders in general. But then if you meet people that have really kind of been in your shoes like 3-5 years ago, it's so motivating to just see how much they were actually able to accomplish. Because I think the expression is everybody always overestimates what they can do in a month, but they underestimate what they can do in a year. And it's so true. Like sometimes when I just look at what we've built, like it's crazy that it's only been like 6 months that we did all of this, and then like the company's been around for 3.5 years, which is like barely anything like in the grand scheme of things.
Yeah. I love it. I think it's great advice too, because if you think about that, what you're doing did not exist 3.5 years ago. It literally
Yeah.
was like, wasn't even an idea. And
Yeah.
to fast forward to today, 3 years now, 3.5 years later, and you've got this platform that's, helping facilitate people's home ownership ambitions and wealth ambitions through real estate. To your credit, like kudos, number one, for making it happen. But number two, like just taking that moment to stand back and appreciate, what people are able to create when they have that driven purpose, right?
Yeah.
I think is just super remarkable. So I love that. I love that thought.
Yeah, it's honestly one of those things of like, I always joke because people are like, how do you do it? I'm like, man, I don't know. Like, I just really like the problem I'm solving, I guess. But like, you honestly have to love what you're doing because, yeah, you're going to get punched in the face like more than enough times. You're going to have some moments you're like, oh my God, this is the best day ever. But it's like you're basically just doing this.
Hopefully
like,
not
the whole
getting
way
punched in
there.
the face at the food court, though, right? None of that.
No,
That
I
didn't
had
happen, right?
no spilled drinks, no face punches in the food court. Everybody was pretty amiable there. So yeah, no issues.
Amazing, sir. Well, to round this out, I know we already talked about the portal, but for anybody else that wants to learn more about Perch itself, where do they go? What do they need to do?
Yeah, myperch.io is our main website. You can really read up on anything there. On the bottom right, you'll see our partner logins, realtor logins. So we do have a couple adjacent portals that essentially, like I mentioned, the ways to get connected into our ecosystem. Yeah, there's really no commitment. The platform's free to use for the realtor, for the client. No one pays services. We're essentially operate as a traditional brokerage model, so we get paid commission from the lender when mortgages close, or through referral fees from general services that get used by our users. So really, that's probably the best way to do it. Otherwise, if you're just genuinely curious and kind of want to track our progress, we're most active on LinkedIn. You can find us there. Like I mentioned, we just hired 7 people in the last 4 months. We're going to need a lot more in 2023 or 2022 if things keep going the way they're going. So yeah, we're always looking for good people. So don't hesitate to reach out if you want to be part of that journey.
Amazing. Well, thanks again for finding some time to come on the show today. And again, congratulations on all the success thus far, and cannot wait to see what's next for you. Thanks again, Alan.
Absolutely. Thanks, Mike. Appreciate your time.
Take care.